And God, I love math. There's so many things you can do with it and so many ways you can look at things, I guess. Just
Yeah, so many different ways. But essentially, as I said, for every, to every student, is important to find your own way, what will fit your style, your personality, and so, and do lots of research on what you're trying to do.
Well, I guess in your opinion, then what have you done to become a successful trader, and what could, maybe it's not what someone else needs to do, but what do you think? What have you done to find your way?
So basically, I read lots of books especially my first 3 to 5 years. I went to lots of this trading books, investing books. Started to watch different guys, mentors, from watching the market from different angles, and I learned so many different techniques, styles. I also apply a lot of market profile. I'm not watching that anymore that much, but for example, back 5-6 years ago, I had that on one of my monitors because I have plenty around me. But then, basically taking from every book something interesting. Maybe it's only like very small detail, but if I can apply and if I see that that's basically constructive in my to increase my performance, and if I can research and study that, and if I see that that is valid, that's pretty much that. So basically collecting lots of different gems and then put it on your way, how to say that. So there is no like miracle in any mentor or something, but it's very important to find the right mentor to guide you, basically to focus on the stuff which are really important, and basically remove the stuff which are totally unimportant. It can lead you can lose basically so many years and so many hours of focusing on something which is absolutely, there is no any kind of foundation, any kind of relevance, and you're still doing that, so it's very, very important. It must, different pieces of the puzzle must be in the place.
It reminds me of university, back when we were doing exams and stuff like that, or tests. We had 10 questions on a test and whatnot. So I go to someone, I'd be like, what questions you got? They're like, well, I've done so far 6, 8, and 9. I'm like, all right, give me 8 and 9 and I'll get you 1 and 2. Then I go to someone who has 1 and 2, I get 1 and 2, and then I'd be like, I'll give you 8 and 9. And they're like, okay, give me 1 and 2. I got 1, 2, 8, and 9, and then after 5 or 6 conversations, I'd have all the answers, and then I'd go and combine them and figure out what's right for myself. And
Yeah.
It's all about combining ideas. Like books are important because they give you ideas. They help, it might not be the right thing, but it gives you an idea, and it spurs a thought, and from a thought comes further ideas, and then ideas could turn into action, and action turns into money, hopefully, and then knowledge and power.
That's true. That's totally true.
Yeah. So yeah, books are key. Books are key for building ideas. And I guess, what are some of the any big lessons you learned? Any favorite books?
Yeah, not particularly. I read William O'Neill books, for example, investing in stock. I read Wyckoff, some of his books based on a volume work. Also, he was one of the genius in terms of technical analysis, very large stock operator back years and years and years ago. So learn principle of supply and demand there, accumulation, distribution stuffs, So Wyckoff actually was one of the biggest names in my early career.
Say that again. What was the name?
Richard Wyckoff, yeah.
Richard Wyckoff. And he's taught you supply demand, huh?
Yeah. He was speaking a lot about volume price relation, accumulation, distribution phases, and different phases on the market. That's where I started. And then lots of things I did on Forex Factory. Lots of different members were active there. Back when Forex Factory didn't have actually so many members, but still plenty of, I exchanged lots of thoughts there, spoke with lots of guys there, posted lots of, things in my head there. So that's very good to, discuss with someone and Yeah.
Oh, collaborative.
All of that, books, mentors, finding, even, of course, interviews like this, people can also learn a lot and get some ideas, some guidance. So all of that online now is like, it's a big sea. Now you just need to filter what is important and who to trust versus,
all the trolls that are out there.
Yeah, so many, especially in the Forex. It's in the financial markets. I don't know, it's huge. Lots of traps and lots of fake stuffs around, to be honest, totally fake. And people are just trying to sell products. They're actually not trading at all. Also, lots of traders, they imagine that trading is about forecasting or prediction or anything like that. But in reality, trading is nothing about prediction or any kind of forecasting in that sense, what they think that it is.
What is it then?
Trading is pure, so it's, for me, it's a pattern recognition, and it's you need to have an edge by going through the history. I always say the best exercise to do and do the own research is on any market is basically go even on monthly chart or whatever, just go through the history and see some of the biggest movements that we have on different markets. For example, if we speak about the stock market, and discover, on the stock, go back how many, many years in the past, 50, 100 years, and see what will cause those big winners, those big movements on the market. It doesn't matter if it's a gold market, euro dollar market, pound dollar, or any kind of stock. Just research those big winners, big swings, and try to find the edge and pattern which will repeat, and something which is very common prior to those big moves, right? And this is how you build edge. It's pure like pattern recognition and basically going through the history by yourself, and then collect that, put in some kind of database or something, and then research further, what kind of pattern are common. I'm sure that you can find at least 2 or 3 very common patterns that you can establish then your work around, or even a single one. If you find very common around those big moves, absolutely, it's enough that you have a pattern that you proved that it can deliver in now, and a few years ago and 50 years ago. Is just tested through the time. If you test it through the time, that's basically you have there your edge. This is where you basically start, and then you need to build execution plan around how you'll execute that pattern. Is that something that you can execute smoothly, or that you can have some relatively tight stop and try to capture those big winners? So
where can I learn more about patterns and stuff like that?
Yeah.
So to learn more about patterns, where do I do that? Any recommendations? I know you do. Is that any stuff you do that with IM Academy?
IM Academy, definitely, yeah, because there's a plenty of education. This is like the biggest company in education. I'm there for more than 3 years. Every day, lots of students. I'm doing live, basically, usually 1.5 to 2 hour sessions, and I'm going through the live market and focusing on the patterns that I'm, watching, and I'm teaching exactly that. So it's an IM Academy, and yeah. But overall, I always say patterns will find you. How to explain that? If you do the proper research, if you know what you're looking for in the research. Now, don't get me wrong. Research, it doesn't need to be like any kind of Excel sheets and stuff like that. Build a distribution curve and stuff like that. So it can absolutely be a visual. You go by hand, as I say, and just go print off the chart or save in the collect the data, and then investigate further. So you can do manually without any kind of and I think that's actually the best way, to be honest, in the trading sense. Even though maybe it's faster to do in Excel and do some with help of algos and stuff. This is the way also where you get lots of experience and confidence, but if you're doing manually by yourself and going through the charts and then collect and save and then rewatch them, see if you can spot some patterns, and then you will find for sure you will find a few valid patterns that you can rely on and find the edge. But even single one is enough, actually.
Well,
you don't need
something that's like just ringing through my head is like going back to mean reversion at the beginning of our call, like at the beginning of this chat. Sorry, like it's yeah, as someone who's in the markets and you hit your trade and you're in the trade and you're like, and you just want to see like the trade keep going in your direction. But mean reversion means, it's going to go and then it'll come back and then it'll go and it'll go back. So the market never always just, sometimes it goes in one direction like it did, last couple of weeks, but sometimes there's bounces and like you said, so it's understanding how do you stay in the market and not get bumped out of the market with your trade, and how do you manage that? Because I think that's probably the biggest problem for most traders is holding winners for longer and whatnot, and I'm guilty of that as well. Well, how do I hold my winners for longer?
Yeah, that's a very good question. So again, everything will come. There's because I'm working with students, and so that's a very question that I got asked a lot, and it's always within the homework and your preparation. So, for example, do you hold for how long you will hold is a part, and the confidence that you need to have to hold will come directly from doing your homework and going through this research process. So, for example, let's assume that I didn't do any kind of research and didn't investigate anything. You'll be basically scared to do anything. Market will move like 20 pips or, and you will be like, oh, it's in plus, just I see the green stuff, I need to close this or stuff like that, because you have no any kind of edge or experience, or you didn't do a proper research. And of course, you will be you will question yourself what to do. Is it now a good time or no? It's now a good time or no, So you need to develop, so the part of the trailing, this is called the trailing function, right? You need to be able to scale your winners. People always put so much focus on entry. That's one part of the equation, but scaling and putting, as I said, you can have a phenomenal trade if you don't scale properly. You can waste your good actual entry, and if you didn't scale properly, right? So until you log the profit, you don't have profit. Basically, that's how it is in the market. So how you hold is basically the part of the trailing function, right? So usually, I take some part, on the swing trading, usually after a few days or so, depend on the type of the entry, and then I trail the rest. You can scale half, you can scale 1/3, 1/4 of your original size, and then trail the rest. Trail function, there are so many different ways. You can also use moving averages again, 10, 20, 50, 30 day moving average. If we speak about the daily chart, you can use per ADR function, average true range, previous swing lows, highs, so many different ways. But again, it will depend on your research and depend on your practice practically to see what will work best for your style. There is no magical number or magical indicator that will tell you this is the best, but you can find what is most optimum for your style and for your time horizon. So basically it's about that. So holding the stuffs, and actually the big thing is about the confidence. I got so many questions on the aspect of how to build confidence in trading, right? People are scared to enter. Some people are scared to enter. Some people are scared to, cannot hold positions. It's all about that directly coming from doing the research and the homework. For example, imagine that you need to, do some kind of presentation, and you didn't actually prepare at all. Well, let's assume. So will you be confident to, hold that? Will you feel confident? Probably not, because you didn't do any preparation. You didn't prepare what you want to, present stuff. It will be pretty chaotic, and, so preparation / homework / doing the research on your own is where you actually build that confidence. Trading is a business, is the largest business in the world. So you also need to have a business plan. It's preferable to have a business plan. And within the business plan, it's preferable, of course, and it's for me must thing to have a trading plan. And within the trading plan, all of the details you write down, your sizing, your money management, your patterns you're watching, your working hours, your daily routine and stuff like that. What you're doing if you're in the drawdown, how you handle losses, when you press your sizing, when you will be on defensive stance and stuff like that. This is what will make a huge difference in the trading. And this is where the professionals are very well organized, and of course with lots of practice and lots of hours on their clock. So yeah,
I like that. The battle plan is key. If you plan for it and you know what to expect, then you'll be ready for anything.
Yeah. Without a plan, it's pretty chaotic. I always say, if you do the random stuffs, you can only expect random results. There is no way you can build a consistency in anything, basically, not only trading, if you're not consistent on your own. And I mean by that, in your routine, wake up, watch the charts, do the preparation, maybe to see the market first 30 minutes or so, do this, do that. You need to be very well organized, and your time must be very well organized, and your routine, you need to develop that kind of routine that basically you do this, that, and it's every day repeating process, basically.
Yeah.
Okay. And lots of traders actually will even get that part, but the next part, it's psychological mindset part, which is, personal. I know actually when I work for a hedge fund, the guys there literally, they had 20 plus years of experience. They actually went to some very basic traps that even beginners will probably, first beginners will, not go into such a naive traps, that they got fired from the hedge fund. And the guys who had like 20 years plus experience, I couldn't believe, but it's possible. Because yeah.
What was the mistake? How do you avoid that?
You need to work on your psychological aspects. Really, I worked a lot. So, for example, when I started, like I was very greedy, ultra greedy. I was always wanted more. I had a very hard time to scale position when I'm profitable. Ego was also very big. Also, very very basic trap is when you fall in love with your idea. But back then, of course, I didn't have this kind of experience and knowledge I have now, but this is a very common stuff, that you like some kind of idea and then you fall in love with that idea that much that you start to do all of stuffs and base your trade based on your ideas, based on your love, not based on your pattern that you actually tested it. So basically you start to base trading on believe that something will happen, or you start to base trade on because your ego is way too big, and you just want to feed your ego. How to say that? But there is a lots of that in the trade, to be honest. Lots of that.
Yeah, I've done that before. Damn, definitely just had a trade idea. Be like, this trade idea is going to work out, but the chart's telling you something different, and just get slaughtered.
Yeah. And then what usually, and this is, I went through that same. We all went through the same. That So basically what you will do, you will try to force that idea that much that you will basically just imagine in your head any kind of confirmation with quotes, you know, to confirm your idea. You know, you will just try to find any kind of confirmation. You know, I remember when I started, first few years, I was like fell in love with my idea, and then I went to different frames just to prove something, that there is a something in my mind that can confirm that idea. So that was insane. You know, you're searching for just something that you can say, oh yeah, this is why, why I'm in this trade now, I know, or something like that. But technically this is an ego problem, or emotionally, you're.
Why do you think I called this trading WTF? Because you're like, what the fuck is going on?
Yeah.
And you're like looking for something to support your idea, and you're like, why? I should be right. No, everything. Yeah, exactly.
Yes, exactly. And to be honest, for first 3 to 5 years, it was very, very up and down. So it's a very big process. And if you really don't have a passion about trading, I don't think it's possible to achieve something bigger in this industry, in the trading industry. I mean, you must have a passion which will be your energy, which will keep you basically going after you go down and touch the ground, especially in the early years or so in Korea. Then the passion will survive that, and you will keep going on, next time, and then you will, on that way, you actually improve a lot and improve your mentality, and you grow on that way. But if you don't have that passion, on the first obstacle, you will be like, okay, this is not for me. Usually that will be the, I know my friends, they asked me a lot. They like the idea, you work from the home, monitors around you, charts, it looks fancy and stuff like that, and you can earn money and stuff like that. But once they tried to explain them very in depth, actually none of them, they just said, this is not for me. I don't know this, and they don't have a will to even learn that, and that because they didn't find any passion or something. It's just not their orientation in that sense, in the business sense. So, and that's also normal. But without very big passion, it's very hard that you will sustain in this industry. So, yeah.
Exactly. Well, if my little nephew watches this, he's like, hey, Uncle Michael, he's like, I want to do what you do. What do you do? And I'm like, I just do magic. I sit in front of the computer and I just do magic. Abracadabra. He's like, I'm like, why don't you go read some stuff and let me know what you read? And he's like, where do I go read? I'm like, what do you mean? Do I got to do everything for you? So yeah. So we'll see where he ends up. And if he really wants it, he'll do the work, and he'll go figure it out, because everyone's got to have that special aha moment for themselves, because the market goes up and down for a reason, because you see something one way, someone else sees something another way, and it goes and it ebbs and it flows. So
exactly. And as I said, the more you grow, basically, you usually mentality. I mean, I found that by myself. If I touch, especially my early career, in my first 5 years, you touch the ground in that sense. So you have some very bad, months or weeks or so. Usually, I work even harder, much harder, to see what's wrong, what should I fix and stuff like that. So every time that will happen, I will press even harder, so that's kind of thing is just what will also be very very productive. Of course, we will all like that we don't have downs, and it's only beautiful Alice in the Wonderland and just beautiful upside in our portfolios. But in reality, this is what you'll experience. So you will have drawdown periods. You will have periods when things are just not working, and you will need to, with your proper sizing and understanding where you need to be aggressive, where you need to step back, this will actually play a big role in trading, very big role. If you know when to press, If you find a good rhythm, market regime is favorable for your pattern or patterns. If you know to press on that, and not to press in terms of the risk or something, but to press gradually, this is how you actually grow your account. If you don't know to stop, and if you don't know to go step back and be on defensive stance when things are not favorable for your pattern or patterns, then it will be you can give basically all profits and you can go into some bigger drawdowns, which is something that you should avoid in that sense. So, yeah.
I got to learn how to press. I got to learn how to press that. After getting, beat up a bit, you've learned how to tame the risk down. Now you got to start to get the confidence to push back a little bit. And
exactly. Gradual is very, very fine. Usually, what I do, for example, it's very simple. If I have negative streak, or something, either my step back is usually I do just some symbolic size just to have something, but it doesn't mean anything in terms of the portfolio until you back your rhythm or until you see the market is, you feel that market is getting in more favor for your pattern. So you're changing a regime that is favorable for your pattern, or sometimes if the market regime totally changed and you have a pattern that is specifically, for example, for one regime, you can just simply step aside until you see the change of regime basically being cash without any position or so, until you see again that conditions are now much more favorable, for example, for the pattern that you're trading. And also one thing I always want to say is that people, related to the trading versus forecasting, this is the really subject that lots of traders just don't get it. They basically usually relate trading with forecasting and prediction, which is totally wrong from my perspective. So there is nothing in trading about prediction or any kind of forecasting or calling tops or bottoms or where the price will retrace or not. So trading is all about, for me, it's about patterns and your routine and the risk perspective on risk assessment, proper risk assessment on that. Technically, any pattern, if you prove that pattern is valid and you did your research, any pattern can evolve into something bigger if you found that from your research. Because we don't know exactly which one will be the next big winner, this will mean basically that you need to be day by day active and watch for those patterns. And you need to, just keep what you're doing, and you will hit the home runs or big winners if you do your process and homework day by day. So not like anything like a random or stuff, not anything based on a lag, because there is lots of guys, I know, especially on the Bitcoin rally and stuff, they got rich and stuff like that on basically absolutely random once in a, they got rich, but they never actually had a process. Basically, that's lottery for them,
YOLO.
Yeah,
FOMO,
that's the YOLO,
whatever.
and that's if they will try to repeat that, and they will think that they know something, and this is usually how they will go into psychological trap. They will think, oh, now I can do because they got, they bought and this exploded, and they now think that they are basically good traders, just because they got into the good cycle, and pressed on the right time, there's nothing with the trading there. It was basically they got it, but if they will need to repeat that, they have zero clue. So if they will continue to work that, for example, they will only lose money. They can lose actually everything they earn by that luck that they got lucky to be in the right right market, which actually had that boom, that parabolic move. And actually, in real trading, if you want to trade for a living or, for example, work in hedge fund or establish your own hedge fund, you need consistency. So something that you can rely year by year, and you need to build consistency. So not the random stuffs that you will pop up at some times, and not lottery stuffs like that, or casino stuffs, which are or random luck that is a one time will last once and that's it. So in that sense, if we speak about the trading, trading is a process, and it's a consistency over a period to deliver results with controlling and without going to an excessive risk. That's what successful trading is for me. Now, everything else is not. I cannot treat like successful trading. And also the results must be noticeable, right? So for me, if we speak about the growth and someone who is starting and someone who wants to let's say make first million or something, you need to have a growth. You cannot have a growth of 10% per year, and you will need how many years to grow your account from, let's say, $10,000 to 1 million, if that's your goal. So you will need to be able then to deliver triple digits per year, at least like after tax, that you can double, 100% after tax, because then you can, even with $10,000, if you do compounding, you will see that 4 to 5 years to 6 years you can actually have, if you double every year, and keep building compounding after every year, you can make $1 million in 5 to 6 years, even on a $10,000. If you're doing that. So it's very possible. I'm just saying that, yeah, but it's very possible. And even with $10,000, you can just do the math and you can see how much you will need percentage to deliver year to year in order to make first million, even from $10,000. Of course, with a bigger capital, 20, 50,000, it's faster in that sense with the same amount of percent. So, and also about the forecasters, and so yeah, I forgot that. So forecasters are paid to write something which is catchy, so they will have audience, and people will click on that article and they will read that. And guys on TV, they're paid actually to say something which will attract audience. So they're paid jobs, basically. There's nothing with the trading there. I just want to separate the trading and with the forecasting / prediction / some big catchy names in the header, of the article and stuff like that. So be very careful, yeah, a second, so just be very careful, guys, if you don't be attracted with predictions or any kind of forecasting, because trading is actually just a pattern recognition and execution plan around the pattern, and your ability to find your own pattern or patterns that you will focus on and basically establish the execution plan around. And of course, psychologically, you need to be able to repeat that process day by day. That's what the trading is about. So define parameters, and routine, daily routine.
One thing about pattern recognition is, one thing I'm starting to do is I'm starting to look at the charts and say, okay, this is the pattern that I see kind of happening, and then maybe I would draw the rest of the pattern out in the future and see what the market would do in the future, and try and place trades.
Yeah, that's okay. Yeah, that's okay. That's a visualization. Visualization is actually important. You visualize that if something went like 100% and did some posing or consolidation, it can go another 100%. And that's actually what the momentum continuational breakout are. You basically, it's good to visualize, but what is not good is to base your trade based on your idea, ego, or you need to base on a pattern, right? Not based on the idea that something, just idea like idea. Idea like idea is nothing, right? If you don't have a proper patterns with where is it the risk is defined and when you understand what you're actually doing. So that's why I'm saying, it's for me, for example, I always say my style is risk to reward model. Both risk breakout, momentum breakout, and reversion to the mean models model that I'm using, if I cannot find a spot where I can make at least 6, 7 or more times bigger potential profit versus my initial risk on that entry, on that position, I'm not interested at all. So for me, on the breakout models, they can you can capture even sometimes 30, 40 times, 20 times bigger profit versus initial risk on that entry. On the reversion to the mean, something that is very common, that is 5 to 10, but still it's 5 to 10, and it can also add pretty good profit on your portfolio. But even if you base only on the one model, you can still be very, very profitable. Like, for example, only breakout or only reversion to the mean. I always prefer my main like is breakout, but if I see really quality reversion to the mean, for sure, I want to be there, because if there is a 5 to 10, 12, 5 to 10 times more potential profit versus initial risk, of course, I'm attracted, to that market. If there is nothing, if, for example, for me, if we speak about the risk to reward models, where it's all about small losses and bigger winners, if there is no potential, we're speaking of, there is no explosive movements in the background, or there is no big extremes for reversion to the mean and stuff like that, I'm not attracted to the market at all. It's for me just very, very, I call terrible looking charts. So I'm away of them. So I always say market must attract us, not that we force stuffs on the market, right? You need to be very patient to wait for the market to attract you, right? For the market to attract us. For example, in this example of the pound, the sell-off that happened, like, okay, pound was going down for days, but then it had like a two down days, like that went like 9 to 10% on the currency. In the currency world is absolutely huge.
It's a lifetime. It's a lifetime.
Yeah, and of course that didn't just attracted me. Okay, attracted other professional traders, the guys with the big pockets, and that's why they were attracted to that market specifically, and you need to be able to avoid the randomness as much as you can. There is a lot of randomness on the market, and you need to be able to focus on stuffs that are hot. This is why I said also in that in my biography that I'm focusing on the money flow. So money flow can be hot on the one market, and for example, for 1 month, and then the next month that market can be totally dead, and then another market will start to shine, or and the money flow is just going from fluctuating from one market into another market, and then back to one market, the first market, and just fluctuation. The same thing with anything in the stock is same. We had actually last 2 years great bull run, and this year is just overall, with exception of 2 to 3 weeks of the upswing, I think 2 times in a year, basically all of the rest is building lower highs, lower lows, and below moving averages on the daily. So that regime, which was active, for example, 2 years, last 2 years, now is totally different, right? This year. But at some point, of course, like, it's happening like it's as long as 50, 100 years ago, that cycle, up cycle, will come again. And the guys who are focusing only on the long only portfolio, for example, they will wait patiently for the market to. Sorry, got lots of alerts on the on the pound.
What's moving right now? It's moving.
Pound is still moving higher. Yeah, pound is still moving higher. So I got it went like. It's crazy, yeah.
Yeah, I got my fibs out. I was like, it's got to go up at least a little bit. It's got to go up to like maybe even like 110, 112, somewhere between there.
Yeah. So yeah, that's basically being very patient. So like understanding that patience is the key here, to wait for your stuff, your regime, or your kind of pattern to show up, or that's very, very key. So overall, trading is very complex, because it will require you, if I can do one parallel line to visualize to your audience, For me, trading is like a market. Like a market is for me like a wild forest with lots of wild animals, crocodiles, lions, I don't know, hyenas, you know. And imagine, for example, that someone will go without and will need to survive in that forest without any kind of equipment, without, for example, weapon to eventually shoot someone if there is some animal is attacking, without anything to be able to survive. So literally the traders, when they go like that into the market, they're basically going into the wild forest without any single equipment. And now my question is, for how long you think they're going to survive, right? In a very wild forest with lots of wild animals there. Not too long, right? So, you know, but if they have a good equipment, meaning in trading, if they have a right knowledge, and if they have a good equipment in terms of, you know, charts and equipment in terms of their process and their routine, then they can be survivors and they can be there for a long time in that forest. So, and there is another parallel that I want to do, you know, even if you have the right, for example, weapon in your equipment, it's not enough, because what you need to have is, for example, I can give you the right weapon to be able, the best weapon in the world, okay, at this moment, that, but that weapon, without lots of practice on that weapon, without aiming, without lots of stuff, without lots of plenty of hours spending, you know, aiming with that weapon and going practicing, you will still not be able to survive. And this is what the people, you know, and traders will, they have a very hard time to understand. You can have the best equipment in the world, but if you're under, how to say, under practiced, right? So you don't have enough practice. It doesn't matter. You can have the best condition in the world, live in the best area in the world, with the best view in the world, with the best monitors around you, best mouse, whatever, everything is best, you know, paid services, I don't know, platforms, everything. Or someone else with a very standard equipment, but lots of the practice and knowledge, can absolutely do remarkable versus the guy who is just doing the, you know, having some fancy stuffs around and zero knowledge or very low, very, you know.
You're starting to sound like Maverick right now. It's not the plane, it's the pilot.
Yeah.
It's
you know,
not the plane, it's the pilot.
Yeah, what I'm trying to say is just many thousands of hours. We speak about thousands of hours, not even hundreds. We speak about thousands of hours. That you need to have the right knowledge, the right tools, and you need to have the right mindset. To compare you also with the shooting, with the forest, to survive in the forest, it's not even enough to have a right weapon and practice, because what can happen is you can go crazy, because psychologically in that forest, okay? So even if you have even you practice that weapon in the forest, even you got a right weapon, right? Maybe the best weapon. If you don't have the right mindset, you will not survive for too long too. So that's why this is very complex, because the mindset is playing the big role. And if you want to be successful, you need to have basically the balance. Everything must be in the balance in that sense. You need to have the right mindset with the right knowledge, and with lots of routine day by day, lots of practice. That is what will make you a complete trader, in that sense that you will be able to basically perform year to year and be able to compete, as I say. So, you know, that's something that will probably take years to develop, right? I don't know anyone personally, even from my colleagues, that they did something before at least 3 to 4 years, you know, 2 to 3 years at minimum, even with 10 hours per day spending on the market.
And I guess just one thing about flow, how do you track flow? How are you able to like see it and see where it's moving and track that money flow patterns or the rotations?
Money flow will show by itself. So you don't need, so for example, you will see some explosive stuff, explosive movements, like the pound sold off like 10%. You see the other market didn't drop like 10%, for example. I don't know, euro dropped like half of that. So obviously you saw that something big happened in the pound. So money will show that the key thing here is that we listen to the market. We don't try to predict where the money flow will go. We want to see the money flow is going, and then that will attract our attention. So instead of predicting that market will, let's say, going 100%, and when market will go, let's say on some stock market, for example, to go 100%, we want to see that 100% move, that market show that momentum flow, and then to watch for example, either for reversion to the mean or some kind of continuational patterns later. So it's always about to let the market to speak instead of that we are trying to think, oh, money flow is going here, money flow is going there. So for example, you can take example of, I don't know, take example of USD Mexican peso, for example, and just open a daily chart. This chart is terrible looking. This chart is like the heaviest noise, probably, that, ugliest chart that in the last couple of years. This is not even a matter of days or months, it's years. It's in some kind of weirdo range, and it's absolutely ugly looking. And then you compare that with the USD yen this year, since mid-March, for example. So one of the best trends on the currency pairs, you basically take a look at USD Chinese yuan, for example, also from mid-March, and now until now, you can see basically the strong upside cycle, strong trends, strong money flow going there. Big boys are involved there. And then you have something like USD Mexican peso, for example, which is like absolutely going nowhere and doing randomness all around this year. So it's obviously where the money flow is going. So that's something that it will not, require a lot, but you need to see and experience this by yourself, to see where what will pop up, what will show, what is holding, what is not holding, what is dropping more, what is dropping less, or what is rallying more. It's called the relative strength. It's nothing new. Nothing new in that sense. So who is relative strength leader, who is lagging, and stuff like that. But this will require, of course, experience, and it's not that ultra hard part, but it will require you to, of course, spend time and go through these cycles, by yourself, to spot that. And that's actually very important. It's also in the stock. In the stock, we have sector rotations. So some of the sectors will be hot, and then they will basically die in that sense, in the momentum, and while others will also show and pop up. The same thing between different currency pairs. Some currency pairs will be very hot for some years, and then some of them will totally be not hot at all. And gold market, any kind of market is same thing. Energy market was pretty good early year. This year, nice bull cycles. For example, grain market, wheat, corn, soybeans, they were very good at the beginning of the year this year, but then they died basically, and now they're basically just doing randomness and trading range in the last couple of months. So money flow was there, then had some bigger correction, and then start to big sideways stuff. That's basically, the situation.
I guess we got the last 5 minutes, so I guess tell us what a trading session would look like with you at IM Academy.
Yeah, on IM Academy, they can also check my Twitter. I have.
What's your handle? What's your Twitter handle?
Yeah, I think. Let me see if I can. I will later just send you. So in IM Academy, I'm live basically every trading day from 5 a.m. Eastern. They can see about IM Academy, and they can search for me. There's a lots of educators, they're mentors, and of course, if they're interested in my work, they can search there. But also, if they want, they can contact me on Twitter or something, and then they can also ask there, send direct message, or so I will be happy to answer. And yeah, but I'm Academy. I'm basically educating there for already 3 years, and basically every trading day, 5 a.m. Eastern time.
Until what time? From 5 a.m. until what time?
Yeah, Eastern time.
Oh, yeah. Until what time? For how many hours do you trade live daily?
You mean on I'm Academy, right?
Yeah, but like, how many hours do you do like the webinars from, or the live?
So basically, it's 1.5 to 2 hour session every trading day from 5
a.m.
Eastern.
to 7. Okay. Cool.
Yeah, they can check I'm Academy, and then if they can want to apply, they can apply and find my channel.
That's a great time, because normally that's when you'll either get like a further push from from the European session, or you'll get a little retracement before the moves like really starts to.
Yeah, it's very good. It's not that good for US, because I know that lots of students are from US there, and they need to wake up 5 a.m. So it's not that pleasant, but if you want to
trade, that's what you got to do.
Yeah, so you need to develop that routine and consistency also in education too.
Cool.
That's true.
Cool. Well, Peter, I want to thank you very much for joining us today. Peter Jaćimović, he's on Twitter, I Am Academy, trade online with him daily. Thank you very much, Peter. Really appreciate it.
It was a pleasure. Thank you.
All right, take care.
Take care, guys.